African Alliance in line with our goal of making European companies more competitive in Africa and taking advantage of international cooperation. The Africa Alliance provides support for success marketing and also business development, as well as via matchmaking and the networking opportunities. To do this, the participants tonight who are really keynote speakers and also giving us a platform of discussion. Our two guests are joining us, and also Silvana will be introducing one by one at later stage. In doing this, the Africa Alliance will enable European companies in Africa to become more competitive and empower them with access to finance and the resources that will allow them to achieve their growth and objectives. Our team are really clearly indicating through advocacy and also through other part of European technology alliances. The Africa Alliance is working in cooperation and partnership and welcoming different key stakeholders. Today, we'll join with two special guests who are really presenting as a panelist. And I welcome our UTech Director, Dr. Igor Gladwin, Director of Energy Alliance. And also I welcome Annie Swedi, Director of Shikana Group, Tanzania. And also the second panelist will be Salum Awad, CEO of SSC Capital for Madiba. And I thank you for joining us and also to participate and give an insight of what really needed for the continent and also globally to make that impact. And thank you for your participation. And I'll pass the floor to Silvana to lead the program. Thank you.
Thank you. And thank you for the introduction, Sise. Great to see you. And now I'm over to you, Igor, for the EU Tech presentation. You have the presentation right now.
Yes, very good. Just a moment. Svetlana, can you see it now? Svetlana, can you see my presentation?
I can see your screen. I can see your screen.
Very good, very good. Dear friends and colleagues, first of all, let me welcome you on behalf of European Technology Chamber. For those who are participating in our events for the first time, I would briefly underline that UTech was created within the framework of the European Union under the SDG programs and organizes its work on the exchange of information, promotion, and commercialization of advanced technologies with the involvement of leading experts in various sectors of the economy. In our case today, with special attention on investment possibilities in Africa and for Africa. Our chamber is organized in alliances. We have, you can see here on this slide, we have regional alliances, China, Africa, Latin America alliances, and DACH alliance, it's German-speaking countries. Tech alliances like mobility or energy or smart cities, or a very new alliance, food farming and fisheries, that we are developing now. And very interesting impact alliances, for example, finance or SDG, or very, very interesting women in tech alliance. We provide and arrange tech events, many digital talks, many webinars. So 200 webinars per year and big expos, and we are going to organize in the next year, we are going to organize physical events like before pandemic, big physical high-level events in Europe and not only. And our leading client, our main target, main goal, and our idea is networking. Networking is our central central idea, as I told you, and we have per year more than 400 networking meetings. And these three things you can see here, this central thoughts and ideas of us, yes? Exclusive market insights for our members in the follow of networking meetings. So networking meetings are meetings where you get your new business possibilities. You meet new people, new projects, new business and commercializations possibilities. Yes, it's very, very important. And the second thing, what is also very important, we have access to European projects and tenders and grants, and we are studying it and we are suggesting it to our members. Here you can see our ecosystem. We have different tools for this networking, for this promotion, marketing. Yes, we have white papers and we have excellent magazine, Visions for Europe, that is in print version and digital version in Brussels, in Paris, everywhere. We have different digital platforms, very, very modern, ultra modern, yeah, and to give our members and advocates different possibilities to meet each other and to meet new interesting projects. So we will be very glad to be able to welcome you in our membership. And now, thank you for your attention, and I wish you very, very successful webinar, but it will be so, no doubt. Thank you.
Thank you, Igor. Yeah, undoubtedly it will be a great webinar. And now also I'd like to introduce our panel here today, but before I do that, let me take you through some house rules, our guests as well. On the upper left of your screen is the public chat function. Here you can pose your questions to the panelists. You can interact with other guests here today as well, and connect as well. And on the bottom right of your screen, there is a screen button. Here you can use it to restore presentation. And now I would like to go straight to introducing the panel here today. First of all, good morning, good evening, good afternoon from wherever you're joining us. My name is Svetlana. I am calling today from Nairobi. I am the coordinator of Africa Alliance at the EU Tech Chamber, and for my role, I do support tech expansion and business networking between EU and Africa. Today, we are glad to have Amne Swedi, Director Shikana Group, Tanzania. Amne is an international lawyer and entrepreneur who founded Shikana Group, a legal and investment advisory company that focuses on foreign investments in Africa. After having successfully founded and run a legal practice based in Kenya and Tanzania, she expanded her business to include investment advisory services. Her company works with an impressive clientele of international companies and financial institutions that are investing in different sectors in Africa. The areas of expertise include natural resources and technology. Amni acts as a non-executive director for several international companies that are operating in the East African Community region, has a wealth of experience in international investment law, as well as governance and strategy. Equally investing in startup countries that are based in Tanzania, and has obtained license in law from Switzerland, Tanzania, and Zanzibar, and has fluent in English, Kiswahili, and French. We also have Salum Mawad, who is the CEO SSC Capital Mbadala Impact Fund, Tanzania. Salum is a corporate advisor, investment banker, public speaker, author, VC enthusiast, and entrepreneur. He is the CEO of SSC Capital, a corporate advisory, investment banking, and financial services firm. Salum also founded Mbadala Impact Fund, Tanzania Venture Capital Network, Tanzania Angel Investors Network, and Wengi Equity Crowd Funding. And so now for our panel here today, I'll go back to the main group. Well, I'd like to give you a very warm welcome to the Africa Alliance Impact Investment webinar here. First, Amna, you're going to take the floor. I'll mute myself to limit feedback noise. And when you see your presentation, please, the stage is yours.
Thank you very much, Svetlana, for the introduction. Hello, everyone. I'm really happy to be here with you. It's a real privilege to be given a platform where I can talk about what I'm really passionate about, which is investments in Africa. And today I'm going to examine impact investments in Africa and really focus on risks and the solutions to risks. So yes, I hope you enjoy this, and I look forward to all your questions, and I hope we have a very engaging conversation about this. Next slide, please, Svetlana. So I'd like to introduce my organization, which is called Shikana Group. I'm the founder of this organization. We're headquartered in Tanzania, that's in East Africa, and we provide legal and investment advisory services to investors, both foreign and local. Sorry. We also
just excuse me, I think we have a bit of interruption here. Oh, sorry. I think that's solved now. Yeah, please go ahead.
Okay, thank you. We basically provide legal and investment advisory services to investors that are both foreign and local, but we also invest in companies, SMEs, mainly in Africa. For now, we have 2 portfolio investments of startups. Our expertise is in the East African market. So we act on the advisory side, we act for both investors and investees and provide a 360-degree service for investors. The services range from due diligence, risk assessment, to structuring and closing of investments. We also give the services that include advising and structuring private equity and venture capital investments, including impact investments. And we work closely with foundations, family offices, high net worth individuals, investment funds, successful entrepreneurs, MNCs, and governments. Svetlana, please, the next slide. So we're going to look at risks of doing that in we have a varied amount of risks. I think the markets in Africa are very different from markets in the developed world. Risks for investments exist across board anywhere in the world, but maybe there are risks that are a lot higher in frontier markets, like in East Africa, for example, compared to other markets. So I'm going to run through the various risks that I would like you to all have. We'll solve political risks. So investors obviously wish to establish long-term and stable ties with governments that they're investing in. So when we are talking about political risk, we're looking at the change of regime, for example, that may leave businesses that aligned basically with the wrong political party. Whilst this impacts all businesses, it impacts impact investors differently, because impact investors may find themselves forced to be aligned with a party that goes against their core values, and therefore they might not be able to deliver on social outcomes. And remember that impact investments, their key metric of success is also the social outcomes and social impact. Political risk can also threaten business models, but it also can impact the day-to-day operations of the investee company. Another risk that is common is the regulatory risk. So this can be two-tiered. We can talk about regulatory risk in the form of vague and conflicting laws. We can also talk about regulatory risk in the form of unexpected change in law. So unexpected changes in taxation laws, for example, situations whereby governments previously granted incentives or subsidies for given sectors, and there's a reversal in terms of that policy. Regulatory risk can also have the face of revocation of licenses or permits, or things like FX control regulations that basically provide for burdensome regulatory procedures that permit inflows of funds in and out of the country. This, of course, is very important for investors generally, because you need to be having the certainty of your money coming in to go to investee companies so that operations can take place. But also, once you realize a profit, that your money is able to also come out. And typically for a lot of investors, this money is going back to the country that the investment is coming from. And a lot of the time, this is outside, Africa. Another risk that we can look at is currency risk. So this impacts investors that usually do business, for example, they receive and they provide capital in their country's currency. So if you look, for example, in Kenya, the investment that's going to come in, the capital that's going to come in might be in US dollars or in euro or in Swiss francs or whatever other currency. So there could be challenges with regards to currency, whereby in order to do business, you're actually doing business in local currencies, and these currencies are exposed to fluctuations and inflation and the like. Another risk is social risk. So this is really the attitudes of social communities, grassroots leaders. This is really a strong risk factor for investors. You also have environmental risk. So environmental risk is something that I think the whole world now is facing, especially with climate change, but it's the climate change conditions, countries perhaps that have unpredictable disasters, and so they're more maybe prone to these kind of massive climate changes that really may impact an investment, particularly when a country has poor infrastructure in place. So this could be a massive risk to the investment. Another risk that needs to be taken into account is basically the risk that has to do with intellectual property infringement risks. So this definitely needs to be the front of investors, whereby investors really need to look at the type of frameworks for intellectual property, the protection that is accorded to intellectual property, but also the questions of enforcement. So, for example, you may have the risk of companies that, for example, an investor could be investing in a company that has a product that might be easily imitated. And so you might have other companies easily imitate your product, start selling this product very cheaply. So you need to see what are the possibilities of mitigating against that risk should this risk arise. And this is a massive risk because it can reduce the market share size of the investor, but also if your competition, unfair competitor, basically is able to imitate your product and take it to market, the quality usually is at risk, and this will obviously undermine the trust that you have already built with the customers with regards to your product. Another risk that needs to be at the forefront of investors is what we call counterparty risk. So this is basically an investor that is investing into a company. You're usually investing in an investee. This investee is usually a local player in the market. And so you need to look at the risk of any adverse behavior of the investees, but also co-investors if an investor is going in and investing with other investors. So typically what we tend to see is that in countries where legal enforcement of contracts, for example, and contractual engagements is very, very weak, we have situations where investees might engage in behaviors like fraud, embezzlement of funds, because they have assessed that there is no real enforcement or little enforcement, and therefore this can be a massive risk for investors. This obviously endangers the social objective of the investment, but it also endangers the financial objective of the investment. So it's absolutely key to engage in due diligence, but due diligence can be quite difficult to undertake in a lot of African markets because there is a lot of challenges in terms of access to data. When you're looking at developed markets, technology has really facilitated due diligence, whereby most of the public registries, for example, are online. So you're able to comfortably search for information just by using your computer. In a lot of African countries, this is not the case. So you really need, as an investor, you really need to have a very developed local network that will allow you to carry out the necessary due diligence so that you can assess your counterparty risk and understand exactly who you are going into business with. Svetlana, slide, please. So, good news is that these risks can be mitigated. It means that they cannot be completely removed, but you can reduce the chances of you being taken by surprise by various risks. So some countries have the possibility of what is known as political risk insurances. And this basically is an insurance that may compensate for the loss that is caused by political upheaval. Another way of mitigating the risks is also done through due diligence, identifying laws and regulations that may apply to specific business ventures at various stages, understanding what these laws and regulations mean so that you are really able to anticipate the impact that these laws and regulations will have on your investment. Certain things that can be done in order to mitigate the risk of regulatory burdens, let's say on capital flows, is typically in the part of deal structuring, whereby you would be able to structure your deal, your investment by having, for example, SPVs, special purpose vehicles, or even side agreements. We also have some countries that give their investors who are typically investing in frontier markets something known as regulatory risk insurance. Another classical way of mitigating for risks is the good old-fashioned networking and being able to really build strong government relationships. This is really recommended. Whilst some investors in certain countries feel that, okay, I think it's best to stay underneath the radar. If the government doesn't know that I'm around, hopefully they're not going to have the idea of, coming up with regulations or changes of regulations, for example, that may impact the business. This is one way of looking at it, and it definitely is an investment strategy that may work, especially for companies that are greenfield. They come in and they're small and they kind of scale up and they grow. But at one point, whether you like it or not, you are going to be on the radar of the government. So it's really important, and I would say unavoidable, to really build government relationships, ensure that you are engaging with government authorities. And if there is not that possibility of investors having individuals that can work in their organizations that would be able to really ensure that government relations is covered, then it is advisable for these investors to engage with local, well-informed entities that are able to give this information, to build those relationships, to engage on behalf of the company with the government. Another way of mitigation of risks is through local currency financing, reputation management, especially when it comes to what we looked at before, which is the social risk. Reputation management and engagement with grassroots is absolutely key. So I think now, although it's still happening in my line of work, we still see this happening a lot of the time. Investors are going to come in and they believe that, they can just have very high level engagements with central government, key figures like the president, the vice president, the ministers, and, they maybe acquire the different concession agreements or the licenses that they need, and they start doing business. And then there's a problem, and there's a problem with the local grassroots. This is very common, because as much as you need it's good to have the government, high-level government on your side, understanding your investment, and offering certain assurances with regards to the investment. Your investment is happening on the ground, and the ground involves the grassroots. So typically in energy projects, tourism projects, mining projects, you're going to be going into, most likely not the city, but in rural areas that have their own structures. It's important to understand those structures. It's important to understand who are the decision makers at the village level, who are the leaders of various grassroots groups, and really bring them on board so that they're able to understand your business, and that you're able to have a buy-in from them that is going to reduce the misunderstandings that are going to happen, that may happen down the line, but also have cheerleaders on the ground that want this investment, that are engaged in this investment. So this is definitely something that more companies really need to engage with. Obviously, conducting due diligence in counterparty reputation and looking at the track record is absolutely key. And this can be done by really going on the ground, talking to as many people as possible, obviously having to sieve through the biased opinions versus the non-biased opinions, but just talk to as many people as possible. Some investors still feel like, they need to be very secretive about their investment. So some of them come to Africa, and they don't really want to engage in really getting information by talking about their investment, talking about what they're thinking of doing, really talking about who they want to do business with. But this is a mistake, because the way that you're going to be able to get this information and really be able to do due diligence on your counterparty or the investee company that you're going to be investing in is basically through the word of mouth and through referrals that come from people on the ground. It's very also important to cultivate this investor-investee relationship that kind of ties in with the last fact, which is the local presence. So what I have seen is that it is not going to work for investors that are just merely, sitting in the UK or in France or wherever they are, and kind of expecting to that their investment is going to be managed through remote control. It doesn't really work that way. It just really increases the risks. You really need to be on the ground as an investor. You need to be on the ground, but you also need to cultivate the trust with the investee. You need to build that relationship. The investee really needs to see, what value am I getting other than just cash? But what other value am I getting from this from this investor? Sorry, can I trust this investor? And this requires you to build that relationship as well. So next slide, Svetlana. Thanks. Okay, so one of the ways of mitigating risk is through deal structuring, and I felt like this needed to have its own slide on its own, because it's actually a very, very important topic that can essentially make or break your investment. So one of the ways of mitigating the risk is this might be like groundbreaking. Absolutely key to have your contract in place, even if you're dealing with a jurisdiction where you feel, or you feel that the enforcement of this contract is not really going to be a good one, that maybe there are all these challenges within judiciary. But what I can say is that having a contract where you spell out everything, do not leave anything out to assumptions and guesses, really builds that trust and understanding between the investor and the investee, which is absolutely key. And it's very important that if, for example, an investee was going into a transaction feeling that, okay, I'm going to just get this cash and I'm going to be able to just do whatever I want, this may change their perception and allow them to really be able to know what they're getting into if you have a contract that essentially spells out everything. I cannot insist on this. It's very important as a way of mitigating your risk to have a clear exit strategy. Okay, so you can't just go into a market and invest and then realize that, oh, I can't exit. And this happens because of liquidity issues that exist in various markets. But then there are things that are very tailored to problems or opportunities in African markets, where you find that a lot of the investment, like companies that you can invest in, are essentially family businesses, for example. So you might have an issue if this is not dealt with from at a very early stage, preferably before you put your money in. You might have an issue of alignment between expectations in terms of exit. A family business typically might all of a sudden get this thing of, oh, we want legacy. Oh, I actually don't want to sell this company. I want to be able to give this company to my grandchild or something like this. So your strategy is exit because no one wants to sell. So have a clear exit strategy and understand what your exit strategy is. It's very essential for the planning for disputes. The planning for disputes, we're often called as lawyers, we're cynical. Oh my God, how can you think of, disputes? Disputes, very much the risk of disputes, whether you're in the developed world or whether you're in the developing countries like African markets, they exist, and you need to be able to plan for them. So what do I mean by that? If you know that you are in a jurisdiction whereby the judiciary is weak, whereby perhaps your biggest counterparty is your party in an investment is the government, but you see that there's no real separation of power whereby the government actually appoints the judiciary, you do not want your disputes to be heard in such a jurisdiction. So planning ahead is for you to anticipate that if there is a dispute, that there is the possibility of you being heard, your case being heard in a neutral forum, typically arbitration, international arbitration, which is even better because there is no state intervention in international arbitration. So really planning for dispute, and this is within that same contract, is absolutely key. Then other things around deal structuring, whereby you can mitigate the risks, is with regards to looking at what is the way that you want to structure this investment. Are we going to use debt investments, or are we going to use equity investments, or are we going to do quasi-equity investments, or is it going to be hybrid? You know, these are all important things that are determined by understanding what the risks are. So if you look, for example, in countries are debt is much better than equity, because typically debt is less risky for an investor, because essentially the investor is relying on a collateral. But then you need to be able to understand that sometimes collateral is difficult to have in businesses in Africa, or it's difficult to liquidate. So for example, when we look at a market like Tanzania, typically land can be something that an investor thinks, okay, this could be the collateral. But then you look at the regulatory risks or the regulatory restrictions, whereby the rules are that foreign ownership cannot own land. So a company that has land asset that could be a collateral for debt, it might be an issue, because how do you really own land that you can't really own because of the regulatory frameworks that are in place? Of course, there are ways around this. Obviously, there are always ways around everything and legal ways around this. But these are things that, you know, need to really be at the forefront, and investors really need to be able to understand this very well. Whilst debt is always very good for a better understanding and a much faster understanding of a company performance, because basically if you're not defaulting, well, you know, you must be doing something right. So whilst equity maybe requires a lot more value creation, which can take time, and it requires a lot more investment into the company in terms of, board seats, in terms of really just being able to have an assessment on the day-to-day operations, so as to ensure that you actually are able to have an exit strategy and recoup your money. So
yes, just to interrupt, maybe 1 or 2 more minutes then. Okay.
I think I'm done. So yeah, I think I've come to the end of the presentation. So those are really the things that, you know, we need to keep in mind. Thank you so much for your attention. And yeah, I look forward to listening to Salim's presentation.
Excuse me. It takes me a while to go back to to the main room. Thank you so much. A lot of questions arising from your presentation. I'll be jumping into that in a bit. Also, our audience here today, there's a public chat function. Please feel free to pose your questions in there as well. Now I'm going to give the stage to Salum. Salum, I'm going to mute myself because there's a lot of background noise on my end. And when you see your presentation, please take the stage. Your 12 minutes start.
Thank you. Yeah, so there you go. So thanks for having me. I think my few slides as well will be very generic, given the topic itself. So I'm just going to give you a landscape of impact investments in Africa. Even though impact investment is quite a very complex now and comprehensive subject, because there are a lot of other subtopics within impact investments, depending on how we want to look at it. But I'll try to be as brief as I can. I thank Amna as well for giving us interesting insights on the risk and solutions, which are pretty much part and parcel of every investment that we do here. Yeah, so next. I think my introduction was done. So I'm a founding CEO of SSC Capital, which is a strategy advisory and investment banking firm, which we started 11 years ago. But recently, as part of our discussion today, given the context, I also thought probably I would share with you one of our initiatives, which is the Impact Fund that we also started almost close to when COVID broke. So it's been challenging in terms of getting the fund into action. So we have an early stage impact fund, 5 million for early stage investments across East Africa. So anyone in the room who is looking for an investment opportunity, we still accept checks, at least $250,000 as initial ticket size for investments into the fund. So as a company, again, in the lapse of 11 years, we've managed to do transactions, whether at the strategy level or at deal transaction level, $300 million plus. And now as a company, we operate in 3 countries, and our 5 main areas of operations, strategy advisory, which I said earlier, investment banking, which pretty much focuses only on 3 things. One is asset management, capital raising, and mergers and acquisitions, M&A. We are also pretty much very active in the private equity space. So we help private equity companies from all across the world to source deals here. So as a company now, we work with 30 plus private equity and venture capital funds for deal sourcing in many markets in Africa. We also design funds, we manage funds, and also do due diligence for investors, financial due diligence in particular, as part of risk management, which Amni was saying. And we're also in the space of Islamic finance, which now has a huge role when it comes to impact investments through its unique bond structure called Sukuk, which we see happening now in Tanzania. And of course, in the space of impact and sustainability, we design impact measurement frameworks. And we can also help private equity companies to monitor their portfolio on the impact of this. Yeah, so you can go to ssc.co.tz. You can learn more about the company and what we do, and salumawag.com to pretty much know about myself and what other things I do at a personal level. Next. Yeah, so impact investment, what is it? So people define it in many different ways. But the common definition of impact investment actually is any investment which is done intentionally to generate impact, social and environmental impact, which is measurable. That's very key. So you must be able to measure it. But secondly, it must be intentional. So you must have pre-designed a model of investment to intentionally make that impact. And unlike so many other people, misconceptions that if you do impact investments, you do that at the expense of financial returns. That's not true. That's not the case. So impact investment is an alignment of both social and environmental impact with the financial return. And impact investment actually cuts across a huge spectrum of activities. Could be unlisted equities, where people would invest in companies which have social and impact investment thesis in the market. Say if you invest in a company that is doing renewable energy listed on any stock market, or if you're investing in Tesla today, which is trying to promote electric vehicles. So that could be part of the listed equities. But on bonds as well, so we know we have the bond market where bonds can be issued whose proceeds will be used specifically either for environmental protection, social development, or financial inclusion. So we know bonds such as blue bonds, which was once issued in Seychelles for ocean investment. We know of green bonds, which have been issued in many other parts of Africa. Private equity as well is another area where impact investment operates. Private debt and real assets, whether it's infrastructure or real estate and other natural resources type of assets. So if you look at where we are now in terms of the size of impact investment in Africa, so you look at the report by the school, which was done in July last year, the total assets under management, which have been raised and used to be invested for impact, for any strategy around impact, investment for impact, because we have around 4 different strategies that are used for investment for impact. So you see a majority of these funds and assets pretty much located within the South African part, where I think 90% plus is within South Africa itself, where total assets under management to around $600 billion as July last year, followed by West Africa, where we're looking at close to $24 billion, and East Africa among the 3 with the lowest total assets under management, which are around $18 billion. And the biggest of all the strategies which are used in impact investments in Africa is ESG. ESG, I think most of us know, stands for environmental, social, and governance, which attracts almost close to $340 billion across the continent. And majority of these activities are pretty much in South Africa, Nigeria, and Kenya. That's the reflection, I think, to the maturity of the ecosystem. So now across Africa, we have around 515 funds which are using different types of impact investment strategies. In terms of the sector attraction, I'm not sure whether the table is very visible, but what you see on top of it is WASH, which is water and sanitation. And then, of course, next to that is financial services, healthcare, food, and others. So these are the sectors which attract the majority of impact investments across Africa. Next. Yeah, so what are the challenges? What sort of challenges do we see in Africa? Despite the huge potential that we see, which has kept on growing for the past 10 years, and according to MESA, impact investment in general across the world is an investment industry which is expected to reach $12 trillion by 2030. So it's a huge, massive industry. But we will be playing that game. Who will be the winners? Who will be the losers? Who will be at the end of the tail? So if you want Africa to be an active player in all these type of investments, and if you also want these investments to be equally, at least to some point, equally distributed across many African countries, there's some challenges that we need to address. So one of these challenges is limited supply of pre-seed and seed capital impact for early stage impact ventures. So what you see today is the majority part of impact investments in Africa is within the private equity space. And if you look at East Africa, for instance, just give a quick case study. For the past 5 years, an average ticket size of private equity investments within East Africa was $6.5 million. So that takes out a lot of real estate businesses which have interesting and scalable solutions for social impact, social environment impact across Africa, but they cannot do that, or they can only innovate, but cannot scale such solutions across Africa because there's a huge mismatch between the amount of money they're raising and amount of money which is available in the market. So that's one of the major challenges that we see. But secondly, there's a huge, if you look at the, I'm not sure whether these pie charts look clearly, but the huge skew when it comes to the allocation of this capital, as I said earlier. More than 70% of all investment in impact space goes to South Africa. And outside South Africa, all you see is Nigeria, which dominates the Western African markets, and Kenya, which dominates the East African market. And for that reason, I think you see many entrepreneurs and companies that are designing impact solutions cannot access this type of investments. And another challenge that we see is the limited knowledge and the capacity to build this type of ventures which will be attractive to impact investors. Because one of the things you will see is the way a traditional investor will look at a company is different from the way an impact investor would. And that's the challenge that we see in these markets. So say you have a startup today which has developed a good solution for smart agriculture in Africa. If they go out and try to attract money, say from an impact investor, some of the things that an impact investor will look at into this company in terms of the screening of this company before they take them up to their portfolio are some of the stuff that these entrepreneurs completely no idea. And at the end of the day, you find this huge mismatch of the knowledge between those who are raising money and those who are providing that kind of money. So I think that there's another challenge that we see, and in return, that limits the size of pipeline of opportunities, and hence investors have less and less opportunities to invest in Africa. Next, which are my recommendations now. Yeah, so these are my few recommendations. I know we can have a huge list of type of things that we need to do, but one thing that for sure that we need to do is to promote homegrown impact funds that will be able to cut small ticket sizes checks for early stage companies that we see in Africa. Because, you know, it makes sense that if more than 60% of all investments that you see in Africa, say in venture capital private equity space, comes from North America and Europe. And it's not commercially viable for someone to fly all the way to Africa and do, say, a ticket deal of $50,000. So you would expect that type of transaction to be done by a local fund. And if you don't have enough of such funds, that gap will continue to widen over time, and impact investment flow will continue to be pretty much lower in markets where you don't have strong homegrown investment funds. But secondly, I think the knowledge gap, we need to do a lot in terms of capacity building, whether it's training, whether working with all these hubs which work with startups to understand about all these impact investment models and how they can integrate such metrics while they're building these startups before they exit the hubs and ready for raising money. The academia as well, the talent that we have in Africa, we all know, has a lot of issues. So we keep on adding more and more stuff, such as now we're talking about measuring impact in a portfolio. You'd expect someone graduating from any of African universities to be able to do that, but unfortunately, it's not the case in many areas, in many places in Africa. So we need to say, how can we also bring academia more to understand about all these new concepts in the finance world? And thirdly, I think it's the question of information. It's not always about the capacity. I know you have smart founders across Africa who would understand these things easily. Some, of course, are educated, worked abroad, came back here as part of the diaspora community, so they will easily understand some of these things. But unfortunately, access to information could be a challenge. Where these opportunities are, who are these impact investors? Where are they? What are they looking for? How can it be part of their portfolio? So that's another thing that we need to see to do best in terms of sharing all this type of information. And lastly, I think it's important for the government as well to come on board as well in all this aspect of impact investments. In our markets, we see they are putting up a definition of a social enterprise, where a company that has a huge impact on the social and environmental impact in a particular area, and they will attract some tax credit given the solution that they bring into the market. So if governments can also look into that and see what sort of tax credits can be provided to a company that has developed a solution which will reduce carbon emissions in one of the markets in Africa, that will attract more innovations, will attract more investments, and for me, I think will help to unlock impact investment in Africa. And that's my last point, my last slide. Thanks for having me.
I couldn't thank you enough, Amne and Swedi, for your excellent presentations. We have unfortunately run out of time. We may not be able to do the question and answer session today, but I'm going to invite our guests here as well to our networking meeting next week on Wednesday, same time. I'm going to leave the link in the public chat so that you can come in and interact more with the panelists and ask the questions that we'll have asked today. All right. Now I'm going to give the presentation right to my colleague Yog, who will present the 3 certificates in appreciation for being panel with us here today. Yog, please.
All right, I'm back. I managed to pick myself out. Very sorry for that. I still try to share my screen quickly, which should work now. And then I have the honor and the pleasure to share 3 certificates. So first of all, can you hear me and can you see my screen showing a 3 certificate?
Yes, please, we can.
Perfect. Then thank you very much, dear speakers, for being here, for sharing your experience, for being such a lively and engaging crowd. That's really highly appreciated. And myself, I'm Jörg Tuchen. I'm the director, sorry, the chair of the Climate Action Commission, and I'm managing director of GoBlue Now. We are a climate consulting company, and therefore I have the true pleasure to hand over 3 certificates for you as speakers of this webinar. EUTech is doing that for all of the more than 200 webinars each year. And yeah, having quickly introduced myself, you immediately see why it is a special pleasure to hand over a 3 certificate, because obviously it is very closely related to climate and climate action, and that's what I do professionally and also in my role at EUTech. So therefore, thank you very much, dear Salum. You see your 3 certificate on the screen. And of course, I will send out the 3 certificates immediately after the webinar. And here is also the 3 certificate for Amne. Also, thank you very much for being here. As I said, it was a special pleasure. And should you or anyone from the audience be interested in learning more about the 3 certificate program we have started in Africa and the tree planting initiative we are doing in Africa, or is interested in learning more about how GoBlue Now, my company, is helping other companies becoming more 1.5 degree compatible, so reducing their carbon emissions and getting on a path towards climate neutrality, please reach out to me. I'm more than happy to engage into any kind of discussion with you, answer all of your questions. And having said that, I hand back to you, Svetlana, and wish all of you a great and not too hot day today.
Thank you.
Not too hot day where you are, a bit chilly south of the equator here. I would like to thank our panel, my colleagues from the EUTech Chamber, our audience for making this webinar such a great success. An after event post will be made available shortly. I have posted in the public chat the link to our networking meeting next week. Please join in to interact with the panelists and ask the questions that we were not able to answer here today. Also, we'll be inviting the panelists as well for further networking. I'll reach out to you in that regard. Excuse me. It is 10 a.m. now, and I'd like to say goodbye. Thank you all, and see you on our LinkedIn group. I've posted it in the public chat. Bye for now.
Bye-bye.